Hey, good afternoon. This is Bob from Trade Genius. It's the weekend of Cinco de Mayo, and I'm doing my review out here in the backyard because next 2 weeks we're going to get cloudy and rainy and some thunderstorms in Southern California in May, and unprecedented weather. So it's going to be very interesting. It's a really, really, really slow cold front that's just coming all the way down from Washington, well, actually out of Alaska, and then it's just going to come straight down, and then it's going to roll into the east. So we love it, but the weekend will be shot here. So I'm sitting out here now. So if you hear any background noises, it's because I'm outside. So what a crazy week. So we had SPY. I'm going to start with here. It was pretty flat all day. Up a little, and the market's been trying to push it at 23.90. I'm at SPY, but I'm talking about the ES, and it was just stoning it all week. And then I actually shut down trading about a half hour before the close. Figured this is as boring can be. And then I come back at the end of the day, and I see that they basically ramped the market 10 points into the last 15 minutes. And I think they're trying to go for all-time highs. They fell just short of it, and the volume is pretty pathetic. And so, one or two things are going to happen here. Is that, they people that were buying back shares, I guess they could start today, or this was kind of the last hurrah to chase shorts out, and we'll gap down on Sunday. But the rest of the May is not really that positive. And with the commodities that are just such a mess, that signaling strong economy. I mean, I talked about this the other day. I mean, Yellen just basically, they're just lying to us now, and saying that inflation's coming back. It's not. And you have oil down 25 as of last night. Was down 25% from 3 weeks ago. Okay, that's not inflationary, that's deflationary. Copper down, steel down. And then I saw a really interesting chart. I tweeted it out on my personal page. Is that the iron ore prices tends to lead the price of the S&P by about a month. And it has collapsed. And then you have China. That's they're forcing a correction in their market right now, and they're tightening credit. And last time this happened, this was like September of 2015, if I recall. Is that's what caused our market to go absolutely zany for like 2 or 3 weeks. And so I think they're going to precipitate the crisis. And and here they're trying to paint the all as well, but I think it's going to be anything but the next 6 weeks. So just strap in, and you probably want to get light if you're trading, and just almost day trade, because things are just flipping back and forth so fast anymore. It's hard to hold positions. So anyway, here's SPY right up there. It was up at 240. It came down a little bit after hours. But here's really GDX too. It was a nice recovery too. There was a fund that got liquidated yesterday. They basically sold their oil positions, but took gold, it took silver, it took miners. It just like was taking everything with it. As of last night, we had a nice bounce on it today. We're in dust puts, so it was nice, and I'm pretty convinced that we're gonna end up in the money on those. There's 31s for next Friday, and I'll get to dust here in a second. But we had a nice move higher at GDX. And now we'll see if we can push this thing all the way up to get up there around this 23 area, get it to the 100-day moving average, and let's start this beast running. Especially if China goes ape shit. Here's really interesting. The financials were down. They know it's coming, and so I think the lift was all the top 50 with stock buybacks and with the yen, and but the financials, there's no good news in it for them. So I belabored the points before. Nothing's changed. I mean, the only reason why these guys aren't all bankrupt is because we changed the accounting rules, and we keep giving them free money. Wish that would work for us personally, huh? Okay, here's the VIX, and like I said, there's nothing left. They squeezed this rock as hard as they could, so now they're working on the yen, and they're going to probably work on buybacks to try to keep this party alive. But even buybacks are falling now, quarter by quarter by quarter. Companies are maxing out, in terms of their ratios. So that, and the prices of stocks are getting too expensive, so it's diminishing returns for them. So I hate to have these stocks start collapsing and people walking in, with their lawyers and saying, "Why were you buying back your shares at the high?" Instead of saving your cash for when the prices fell. It's just poor fiduciary management on the part of the CFOs and the boards. We have here Apple is no growth, zero. Stock's up 50% year over year. And I'm just going to tell you what's happening here with the market is we're all passive investors. Well, we're not, but there's passive investing going on right now. And so Apple's just a recipient of it. And whether their news is good or bad, they have an allocation and they get money. So until that risk parity trade turns, or the Japanese stop buying ETFs, then Apple's in big trouble. But in the meantime, they'll just keep trying to squeeze it. Theoretically, if Apple used all their cash, they can get the stock to 180. So just FYI, they're obviously not going to be able to use all their cash, because even if they bring it all home and do that, they got to pay tax on it. So just giving you kind of a frame of reference here. Company not growing, and they're using their cash to basically shrink their float. Is that you just do the fast math, and that's where they end up, and then who knows what will happen to the stock. IWM, it kept going negative all day until the last bit of ramping here, and so, like I said, small cap's going to be where the weakness is, and that's where I just keep focusing my shorting efforts. We have TWM, and I got IWM puts and spreads, and we just keep rolling down and rolling out and messing with the spread to the sold legs so that we can turn profit. So I have the 137.50s, 136.50s now, all for next week, and then I'll look to adjust those again on Tuesday or Wednesday. UVXY, we talked vol already. We have GDXJ, we talked about the miners. XLE, it's very interesting here because the oil returned. I don't know if this was a dead cat bounce, or if there's a change in this is washed out, and we have a run here for 67 to 70 in XLE. Just something to watch out. Nugget, we put a trade on yesterday. I got stopped out immediately. Some of my subscribers stayed in. Lesson learned. I'm just not going to put the stops out there. They seem to run. I like to go between 3 and 5%. I like to give myself room, but I put them out there, and then I have to live by them. And so I didn't get back into Nugget. I already had dust puts, but people stayed in it today, and I told them 30 would be a good target. It hit 30 and drifted back, but I think, like I said, with the rest of the miners, it's going to go. UNG, massively net long on the spec side, and we're going into May, June, July, July starts picking back up, but May, June are pretty weak for natural gas. Look for every opportunity to short any rip that you get, and we will be doing so. XIV, it was kind of flattish today. Like I said, they're running out of juice. I think this weekend I'm going to pull up the VIX Central chart and just show you the market structure for volatility. It's just absolutely incredibly flat and low, and it's not positioned at all. If we have any sort of surprise that pops the VIX short term, the the market selling would be overwhelming. I just can't believe the Federal Reserve and the SEC allowed this level of trading to happen in the volatility with these risk parity funds. I can't believe they didn't make these guys change their algorithms or their market to be less risky, because the exit ramp will be closed, and people are going to be clamoring to get out. And by the time they get out, the bridge will be gone. And it'll be ugly. See, this is like, we had the flash crash in 1987. This is it in a different way. So people are selling puts, and they're selling calls, and they're selling volatility just to grind out income, and they don't realize when this thing goes into money on them, they're going to have to be covering like crazy, and it's just going to create a cascade, and it's going to happen overnight, just like they did with the oil. They just destroyed this oil company overnight, and those of us that were awake saw it. I went to bed, got up, I got long. I was long already, got up, and it was back to where it was when I went to bed before the crash on it. And then today they pushed it up to 46, 50 area, which was like almost where it was when it started the day yesterday, before they started to nail this trading firm. And that's what's going to happen to a lot of people, because a lot of people are really leveraged, and once these algos start sniffing out weakness, they're remorseless and they're relentless. But we all get to go for the ride, and it's not going to be fun. Like I said, with oil, kind of flattened out today. We'll see. I closed my oil longs. I had future contracts, and when I closed those, my UCO position got closed yesterday morning, and but the futures really paid off for me, because I was able to average down overnight and take advantage of the of somebody else's misfortune. Silver, we bought silver at the close, 1548. It hit a big fib line for us. They grinded this thing to death, and I think silver is going to make a move, and we'll be adding to other miners once I make sure it's for real. Like I said, dust was at 38.50, close day 34.50. It just takes a day or two for this thing to drop 10 or 15%. So I always like to short dust and short nugget. I don't like to go long them, and let the math work in your favor. If we can get a trend on these things, it'll pay bigly. MOS washed out. We're in it for hopefully a longer term with a profitable conclusion. All these farms, if they can't get their crops in the ground, they got to dump potash on these fields, and it's going to lift the price. And that problem is worldwide. It's the wet now that's really, Argentina and Brazil and our Midwest, I should say Plain State, and going into the Midwest now, they can't get the crops in the ground because the fields are too wet, and it's still raining. Not just raining, it is pouring rain. And that's solar minimum. People think, it's going to be like an ice ball. That's not necessarily the case. What happens is that it's cloudy, so you get less sun, it's cooler, and you get a lot of rain, and then you get what happened in Kansas. You get these late frosts. And guess what? They're getting frost in Europe again. So this is going in the second week of May, and they have shorter growing seasons anyway. And so they've already destroyed their fruit crops again and wine crops for the second year in a row. So, and France is having problems with their wheat again. And so all this starts catching up. We were really lucky last year because we had Russia just produce so much grain that they were able to push us over the top. And this year, I don't think they're going to have that kind of surplus. And so it's going to definitely firm up food prices. I'm going to skip this one. I'm gonna probably take it off. I don't really trade it. It's just manipulation. And like I said, the real estate is really governed by the interest rates, and so I'm gonna wait until we start falling pretty hard. Interest rates go down, and real estate doesn't follow. Then I know we're ready to go in short real estate. Okay, gold. I'm gonna flip over that. It's kind of flat right now. Oil we talked about. Talked about the servicers. This is the Amazon. Didn't really do much today. Discretionary markets just toasted. So Silver Wheaton. I will jump on Silver Wheaton here soon. I didn't want to take a position today. I don't know if we're dealing with a dead cat bounce here or not. So I'm going to wait till next week. Talked oil. We talked miners. Biotech is drifting down a little bit, but I wasn't gonna short it on a Friday because usually they lift everything Friday. We saw that with SPY, so I'm gonna wait and see. But I think it has an opportunity for it to fall, to about right here, 67. So probably there's a 2-3% move in it. Let's see here, anything new I want to share. Dollar kept falling again. It's interesting. It's been falling now for a month. DBA. Okay, I told you our plan with that is that we're simply now going to be holding this thing in the service for a long time. I'm just going to be trading in and out, scaling, so that we can just bring these averages down to where we don't have to worry about them. And DBA is pretty broad based, and then we have the grains with JJG, and those will be the two that I'll be spending most of my efforts on. And as we go into this, I think these food shortages, you're just gonna see these things start to really take off. Look what happened to cow, COW. 10,000 livestock got killed in Colorado, western Kansas, and they just jammed the futures markets. And you just catch these future guys short. And if there's a run on product, then it's really gonna move these markets high fast. Same with coffee. Same with wheat. Talk real estate. Talk miners. Talk bio. Talk nat gas. Sugar's part of DBA. And here's the end. Toward the end of the day, it started to lift back up. This is what's been pounding our metals and miners for the last umpteen weeks, almost a whole year. They've just been using the yen as a funding source. But if they lose this and they already have vol really low, that's what's going to turn the market. So I just think this ramp at the end of the day was let's see if we can get some shorts to cover. Maybe we can get some money on some options, and then we'll shut this thing down. There's JJG. We went ahead and we did our second add to, and then I'm going to go ahead and close that at 28.14, and then that basically will move my averages down on our price. Down even below the second buy point. So I was just keeping a running tab on it, and like I said, we're just gonna keep doing that and just maintain a position in JJG and DBA all the time. But I want to make sure everybody's cost base is low enough so they're not fretting all the time. Corn's looking good. Talk nat gas ready. Here's the bond. This is what they've been screwing around with here, trying to push the bond market up, yields up, and trying to force people out of the bond market into the stock market. That's another algo trick. So they have the risk parity guys, and they got the stock bond guys, and so they play these tricks to force action in the markets because everybody's passive anymore. So you got algos running wild. And let me go back to that one. So here's the VIX. The VIX even lifted today. And like I said, once they lose control of volatility, lose control of the yen, then this party's over. And that's it. So you guys have a great weekend, and I'll do some specific things a little bit later over the weekend and see if I point out anything really new. Thanks. See you guys later. Bye.